Good morning, guys. Welcome to this Friday, January 9th. And thank God it's Friday. We need a weekend. First full week for a while. I mean, the last couple of weeks has been like these half weeks, Christmas and New Year's. First full training week. And we're going to run into today with looking for that employment situation number. Potentially getting some Supreme Court verdicts out. I don't know how those, if they come out, is going to impact the market. That's going to be anyone's guess. But the tariff decision could certainly be a market driver. So watch for that. Other than that, what we have on the schedule though is employment situation at 8:30. At 10, we also have housing starts and permits, and then consumer sentiment at 10. So that's what we got on tap this morning. And yeah, it could be crazy. It could be a crazy day. So employment situation could get the market running higher. It could get the market on a trajectory lower. It just depends how the market interprets the numbers. So far, I mean, we had a lot of positive stuff going for us. So it's we're coming out of this Christmas holiday with a a little bit bruised Santa rally, I would say, but we had one going into Christmas, and that was about it. Then we had this last pop here, hit the 7,000 mark, backed off, and now we are sitting here in a holding pattern going into a day with pretty good news. So we could go either which way. Uh, Starting off though, I mean, looking at capital flow, we have capital flow is still pointing higher. So that's still on the long side of it. And that's your capital flow. The exchange member chart is range bound. We made new highs and backed off. So I would still favor the long side on that, but I would start off range bound. So initially, I'm looking to buy weakness down to this level, the 69.30 and 25, 69.25s and 69.30s. Rotations back up. And I'm looking for a good short against the resistance. Now this edge got kind of screwed up here a little bit. So I sat with this one for a while this morning, and I'm just getting ready to just kind of redo this whole thing one more time here. Got you here. So it's like, I redo this. I'm watching these two. I'm kind of going back. We didn't want to get it too crowded, but I'm just going to make one big edge out of it because I don't know quite where the lower edges in this thing. So I'm just going to go do this, drag this whole thing down, drag it down this far, like so. So here we have it, and get a little bit cleaner to look at it that way. Get a little bit less precise, but a little bit cleaner. So, and we have a potential edge down here as well in the middle. I'm not going to draw that out because it could be anywhere, but you see that's a nice ledge right there. That could be an edge to pay attention to. The fact that we traded up above it here in the overnight, yes, it's important. It tells you that edge may not be that important anymore. Let me see if I can find my capital flow again here. This one there, no, that was NASDAQ. Where is the dang thing here? F1, this one, no. Oh yeah, I moved it up. There it is. There it is. Found it. So I would start off range bound. I would look to buy weakness. I would look to sell strength. I would favor the long side of the market to get started. And depending on how the employment situation is going to impact the market, we could find ourselves in a selling dynamic or a little rally. Could go either way. Good news is good news. We'll see how the number comes out. But I would just watch the market. If we get the Newsday kind of a trade setting up there and they start taking out in the direction, I would look to trade in that direction initially, and then see if there's any follow through. If not, we just fall back on the analysis. And analysis is just we're still in this range. If they can clear this hurdle here, the 69.90s, and the trade above it, we may have a shot at taking out the highs again and extend. If they start taking out these lows down here at the 68.90s, these support areas and that volume edge, we may be in a spot where they start retracing to the downside. So the lower attractor is going to be down here at the 68.50. So it's not too far away, but once the momentum starts one in the direction, especially on the way down, you know how it is. On the way up, you see how this is grinding on the way up, but then you can get one of those trading days which takes it, which you're going to take it right from from this level right down here, testing these lows here at the 66.30s. I mean, that could very well be a one of those risk off days, and that's absolutely lean into it. So on the way down, it is amazing how hard they can hit it if it starts, and that pile-on effect on the way down is contagious. But anyway, we'll deal with it when it comes there. I mean, if you start seeing them taking out the lower level here is the 68.90, 68, 6900, 6910. That's when you start thinking a big risk off kind of a day. At this point, we're looking to buy against those levels until they take them out. We have the first levels I'm looking at is going to be down here to that 69.25s. Below that, below 69.25s. If these two support areas come out, I'm going to start thinking short side of the market. Still looking to buy against 69.10, 6900, 68.90s, but not just as aggressively. And then let's see how the whole day shakes out. And if they start grinding this higher again, if they become one of those relentless grinds to the upside, then just stay on the long side. I would initially look for short setups against the 75 level, 75 to 80, this area just drew out, and also that 69.90s. So these two areas. The last one would be 7,000. Above that one, I would think we are heading higher. Any of these support resistance areas on the way up here could potentially hold. I think the better ones is going to be the early one at 75, or the mode here from a couple of days back when it took out the highs. But you have more levels above it. So these two are the one I favor. I'm still looking for shorts against the 7,000 and the 7,010s here for rotations down. And if they start taking everything out here, well, just stay on the long side. It's one of those things, you just have to watch the market and depending on what happens, adjust your strategy a bit. So the big thing for today, I think, is really, are we going to get more of a trending day, or are we going to get the volatile day and still stay in the range? So that is the question, and depends on how the employment situation comes out, consumer sentiment, but also depending on how if there's any Supreme Court tariff verdict which comes out and potentially puts things in a different perspective. All right, so here we have NASDAQ, and the NASDAQ is has not been able to get back up towards the highs. They're still getting stuck here at value. So they're coming to value here around 690 to 700. And I would just start off range bound. We had a pretty good distribution here to lean against. So get short all the way up here to the 890, 900s. Get long all the way down here to the 540 down to the 500s. You see this inner little volume range. So they're right at that upper volume edge right now. You can see it on that F2 as well. So if they trade, this is probably your attractor area where value is at. So if they on the way up here above it, I would look for short setups. Below that edge, I would look for long setups for rotations back up. And if you start blowing through some of these, given news, you don't have to be super aggressive on the edges. Just give it some room to settle down, because you never know when you have news driving the market. That's when you get to move out of the middle, right? So that's when you want to be cautious about aggressively fading edges. So let the news settle in and figure out what the market is trying to do after that. So at this point on the NASDAQ, looking for short setups against the 750s, 790s, 840s, 890s for rotations back down. I would say about that 890s, we're probably going to start leaning in on the long side. Still looking for shorts against the 930s and the 990s here, but a little bit less aggressively. And on the way down, looking to buy against support. Aggressive would be 700, 660s, 620, 560s, 520s, 460s for rotations back up. And I would say give it down to 460s. It gets us down to 400s as well. So this lower edge as well. That gets us down to the big ledge right there. And if that comes out, well, bets are off. So pretty wide range on the NASDAQ. But as I said, both capital flow is still pointed higher. They're coming to balance but with capital flow pointed higher and exchange member charge being range bound. Start off range bound, favored alongside if anything, until you start seeing a potential risk off day develop, right? So that would be the one to watch for. Now you can watch for it, and it may never happen. But when that elevator down the day happens, you want to be picking up on that one earlier than later. And we are on a Friday. We have employment situation come out, and it could be pretty exciting day. So anyway, so look to sell strength all the way up here to that to these levels here to the 890s for the Nasdaq. Above that one, still looking for shorts against the 930, 990s. Just not as aggressively. And looking to buy weakness all the way down here to the support areas at the 470 and the 400s. And if both of them comes out, then we start thinking about a risk off day. And it's always like the short side is always the one you have to watch because it's not a symmetrical way this works. On the way up here, there is a grind, they knock it down. There's grind, there's knock it down. And on the way down, it's a freaking elevator. When it starts, it's just hold on. And it's like a relentless selling going on. Well, you've seen those days. And if you're on the wrong side of it, you keep buying into it. You just get run over. And that's where you need to just really take a step back if you get run over once or twice. Like, okay, what's going on? Take a step back, reassess, and go back at it. All right, then finally, bonds. And bonds actually broke a record. That's just a range-bound market. It could be some action today, though, with the employment situations. We may get some directional moves on that one today. We'll see. At this point, we're starting off as usual, range bound on bonds, looking to buy weakness against the 09s, 04s, down to the 28s, 1428s, looking to sell strength against the 1520s, 26s, up to the 116s for rotations down. So that's 3 levels up, 3 levels down. Pretty straightforward. Patience required. And wait for the setup. And you get a setup like you have right now. I mean, you saw it down here. 1, 2, 3. I mean, you at one point here, you can just click in the order and hope for the best. You're at support, the ideal level setup trigger. So I mean, this has been stalling here for quite a while. So when you get closer to that 8 o'clock, 8:20, this can't do anything. Could be a potential fill opportunity. Now you had an unfinished auction down here at the 115.09. So you could have gotten filled there, depending on how early you clicked in your order. But you can see on this down here, you've been down here once, twice, 3 times. And the third time, if you don't find if they can't bust it, you're going to get someone covering that. And you can see how that looks. It pops up pretty good. I don't tend to trade the overnight on the bonds because it's slow during the day session. It's even slower in the overnight. Unless there's some news going on, you can see it. You can sit in that trade for a few hours. So you have to just be super patient. But so I don't do that. I'm not that patient. So I'll trade it during the day session. Look for the setups. A little bit more activity going on then. All right. So back to the ES and Nasdaq, and let's see how that goes. And right now we are looking at everything kind of where we left it. And it looks like the overnight is kind of leaning towards the long side. So let's see if we get some early strength out of that. But the news in about 10 minutes. So go get some coffee, get ready, and let the fun begin, right? So I'll see you back at 11:30 for the next update. Good trading.